Hey folks, welcome to the Contrarian Trader. This is Bob Desmond. And before we get into the best stock picks video, let's discuss how well we've done so far in 2015. It's been a great year so far, despite the fact that the S&P 500 is barely green on the year. Now, how have we been profitable so far in 2015 while others have lost money? It's because we continue to use the same recipe for success. What is that recipe? We short stocks that are overly loved, and we buy stocks that are overly hated. For instance, Netflix was spiked higher a few days ago on good earnings, very good earnings, and we shorted into that strength, and we booked profits. We used the March 430 puts and made a really great profit in only a few days. FXCM was just murdered due to the fact that you had the Swiss unpegged their currency, the franc, from the euro. And we stepped in when nobody else wanted it. We made over 90% on that trade alone. What other trades? Oil, energy. Everybody hated them. We liked it. We went long before it became in vogue to be long of these names. We stepped out. We're out of them now, because it's too late to get involved with them. The risk reward is no longer in your favor. So I'm going to go over these charts in a moment, as well as stocks that we're looking to trade in the coming week. And tomorrow I'll be sending out my top 5 stocks under $10 that we're looking to trade as well. So if you want that video, if you get any value out of this video, please enter your email address. You'll get notified via email, or you can follow me on StockTwits or Twitter. Please share this video if you get any value out of it as well with your friends. Now, let's get to the charts. I'll see you there. Okay, folks, let's kick it off with FXCM. We bought FXCM on the 20th of January while it was at extreme oversold levels. You could see that the RSI was about 8. That was on a daily basis. On an intraday basis, it was below that. It was just a complete disaster. So we stepped in early in the day, and we enjoyed a rally up to and into the 22nd, where we booked over 90% profits on this particular trade. Now, how do we know we were going to make money with FXCM? We didn't. You never really do. But what you need to have is a plan, an exit strategy, and that's what we had. We knew that we had a clear and distinct, let's go to the 30-minute chart. Here you have it, RSI and intraday basis on a 30-minute chart. Here's where we got in. And we knew that if the stock traded back down below $1.28, we had to get out. But as luck would have it, the stock took off. We had confidence in the fact that the markets had simply just killed the stock for no other reason that they didn't know the terms of the agreement, that the bailout that they received. Who really cared? We knew that there was going to be at least a knee-jerk reaction. I didn't think for a second that this was going to be an investment. There are better stocks out there to buy as an investment, so we sold into strength. Now we're looking to get back involved with FXCM, again, as a swing trade off of extreme oversold levels. But we'll be looking at the intraday charts once again to determine our entry point and our exit point for the best risk-to-reward entry and exit points. Let's move on. RIG. RIG is a great example of how we use multi-period charting. You never hear about it on CNBC. You never hear about it on Bloomberg. It is how we live and breathe here at the Contrarian Trader. Now, looking at a daily chart, you can see that it was at extreme oversold levels, and it did rally. What did it do? It rolled back over again and made lower lows. You can't make investment decisions on a daily chart. You need to use monthly or weekly charts. In this case, we went back all the way to 2003 and 2004 using a monthly chart to identify where there was historical support. We knew that our risk to reward entry point was rock solid. And in fact, we got in below this prior support level and enjoyed the rally higher. Now, had we broken down below 1450, we would have been stopped out of the trade. A very, very clear and distinct risk to reward entry and exit point. Very, very important to know. We're out of this trade now, and what did we do? We rolled into Paragon, PGN. I took a tax loss sale back in December on PGN. It continued to break down. Our 30-day threshold with the IRS expired, and we were able to get back involved with the stock when it flashes doji star formation. The stock subsequently took off, and we sold into strength. So a great trade, and the fact that it closed above the 50-day moving average implies that the stock probably wants to head higher. TNA, we booked profits into strength on Friday. We are now out of the TNA, and we do have some short positions. This acted as a hedge against our shorts. We may add back to the TNA on a pullback, and if that pullback is on light volume, I'll get into that with members on the week ahead commentary. In fact, members, the market pulse check is already posted on the members area, so you can go view that now. The focus stock analysis video where I'll review all of these charts again, but in greater detail, will be released on Sunday. You need to be a member, 14-day free trial. You can check it out. Tillies. Everybody on Twitter was so excited about Tillies. Baird had pumped up the stock. We shorted it on these topping tails. We booked profits. And why did we book profits? It's because we saw consolidation. And we saw a pullback on light volume that does not bode well for a stock that is very, very strong. Now, had we seen a continuation breakdown on the stock with rising down volume, we would have remained short. However, it wasn't to be. The markets told us that it was first out, best out. Book your profits, move to the sidelines, and now we're looking to possibly either A, short it off of this bullish key reversal where we saw a bottom at 1320. We remain independent formation. Friday was very bearish action, but it did hold support. So I can go either way with this. If we see a breakdown below key support, we might get short. If we see a breakout above resistance, we might get long. Folks, we have no emotion whatsoever to any given stock, index, currency, ETF that we trade. It doesn't matter to us. All we care about is great risk to reward, entry and exit points, and identifying the best vehicle, meaning a stock, ETF, whatever, that's going to make us money. I really keep it simple. And we use the charts. I don't care what Baird said about Tillies, that their thought was the stock is going to go into infinity. What I care about is the charts, where historical resistance is, and the topping tails implied that there were sellers above. And we sold short into the signals that the market sent us. Next chart up is the USO weekly chart. Everybody hated oil. Even Dennis Gartman saying that oil is going to go the way of whale oil. Maybe he's right. But in the short term, oil was trading with an RSI on a weekly basis below 10. How often are you looking at the weekly charts to identify great setups? Everybody's too involved with day trading, watching intraday charts, and that's great for some people, but they're very, very few. I have a lot of respect for day traders. I am not a good day trader. I am a swing trader. I am involved with stocks for several days to several weeks to several months, as long as it keeps working for us. And we use multi-period charts, whether it be intraday, daily, weekly, monthly, in combination. That's how we determine when is our best risk-to-reward entry point. Now, with oil, we knew that the U.S. dollar, which oil was sensitive to, was getting extremely overbought. And I pointed out to my members, besides the fact that we had RSI below 10, I also pointed out to them that this is a commodity. And commodities can go to super extreme oversold and overbought levels. So we needed to wait for the markets to send us a signal by way of bullish price action. And it did so the week of the 12th, and then again on the week of the 26th, where we flashed a bullish key reversal, we got long, and we enjoyed this rally higher, and we sold into strength. Now, this topping tail here leads me to believe that with the recovering U.S. dollar, we're probably going to see some weakness on oil. Does it mean that we won't get involved with oil again? Sure we will, as long as we see a pullback and a higher low or a double bottom setup. I'll go over that with members on the week ahead commentary. Netflix, which enjoyed a huge rally after reporting earnings, we were selling while the shorts were getting massacred. We were selling short using the March 430 puts. And we enjoyed a rally down to the 430 level, 433 actually, and we booked our profits. We scaled out of our position as we saw bottoming tails, and we saw the threat of the fact that this support level was going to hold, and we got out when the market sent us a signal. And I pointed out to my members that, in fact, we may just see a rally on Netflix. A couple of my members did get long. I didn't. For full disclosure, I did not get long of Netflix, and they enjoyed the rally higher. So congrats to them. I'm glad they did well. The FXC. Let's just go over a couple of stocks I pointed out. I believe it was last weekend that were short squeeze candidates. Nobody wanted these names. The FXC is the Canadian Dollar Trust. RSI at the time was trading just above 10. And had you traded it from where I discussed it, you would have enjoyed a rally up to 80.48. Now you're seeing a pullback. It's too late to get involved. The short squeeze is over. We've taken this off of our watch list. Molycorp is another one. We were discussing it here, and a bunch of my members got involved with the name, and they enjoyed this short squeeze higher. So congratulations to them. This is a profit of like 150, 200% had you held long. So congratulations to them. And again, this is the value of using multi-period charts. We do not want to just use the daily charts, intraday charts. We want to use weekly charts. See how the stock is setting up as a potential long, because the daily charts have a tendency to be way too noisy. In fact, let's take a look at the weekly chart now, and I'll show you what I mean. Now, looking at the weekly chart, you can see that RSI was confirming the daily RSI at extreme oversold levels. We had broken down below the lower band of the Bollingers. The week of January 26th, we saw an inside week, meaning we didn't put in a new weekly low. That's a bullish sign. And then sure enough, last week, the stock just skyrocketed. Now, using the weekly chart, I could tell you that this coming week is probably going to be fairly bearish for MCP. Why? It's because we know that by using the weekly chart, that there are sellers up here. These people sat out this entire downward move, and all they want is their money back. This is where psychology comes into trading. And you could see that the topping tail here on the candlestick, wick, shadow, whatever you want to call it, shows that there were sellers that sold into strength. Again, people back here wanted their money back. They're not looking for a profit. They just want this red entry that they've seen on their brokerage statement for the past several weeks to go green, zero out, and they just want to take a deep breath, go have a drink, and be happy that they're out of MCP with their money back. So I would avoid MCP for right now, and it may set up again in the near future. DBC, the DB Commodity Tracking Index. I've been bullish on this for quite some time now. Double bottom setup. We're making higher lows. I think that we could still head higher. The only caveat here is that we need to watch out for the US dollar. I'll be going over the DBC with members on the Focus Stock Analysis. That'll be released on Sunday. Now, how do we know that the DBC was done going down? Take a look at your RSI on a weekly basis. RSI below 10. Very much like the USO, crude oil. Now, is that enough to go buy the DBC? No way. You want the market to send you a signal. And it confirmed our opinion by flashing bottoming tails and a bullish key reversal. That's our signal from the market that there are buyers below. Everybody can complain about algorithms, and they can complain about how hedge funds are beating them up and that it's not fair for the small investor. I say bullcrap. The small investor can make money as long as they're disciplined and they use stock charts. They don't take tips from their friends, and they stop listening to the talking heads on CNBC. Have faith in your ability to read charts, and if you need help with reading charts, you join a service like mine. Even professional athletes have coaches. Allow me to be yours, as I am a coach to many others at this point in time, and it's the most satisfaction I get out of trading is the ability that I have to teach people how to learn the markets. And it's not just chart reading, it's how to identify when the time is probably coming near that we're going to see a bottom, like with the US dollar, as I have overlaid here in green. The US dollar trades inversely of the DB Commodity Index. It trades inversely of the USO. So when I saw it go to extreme overbought levels, and knowing that if the dollar pulls back, then we're probably going to see a rally in oil, the energy names like RIG, PGN, and the DBC, that we must be ready to fire off buy orders on these names, which is what we did. That's why we are beating the S&P 500 by a long shot in 2015. It's why we did it in 2014. It's why we did it in 2013. I'm not reinventing the wheel here every day. It's just a simple formula that keeps us ahead of the pack. Don't worry about all these algorithms and all that other crazy stuff. The only time that people go wrong in this business is that they listen to the talking heads in the financial news media, and they overtrade their accounts, and they don't set good stop-loss orders, and they get in at the wrong time. Don't get suckered in. Okay, BAC is the name that I'm going to be going over on the Focus Stock Analysis video, set to be released on Sunday to members. Rates are going higher, folks. That bodes well for the banking sector. I wouldn't touch BAC on Monday due to the fact that you have sellers that came in. Those who bought here want their money back, and they sold it to strength. There's going to be an opportunity to get long a BAC at cheaper prices, and we intend on doing that. And I'll be going over our strategy with members tomorrow. BAC daily and weekly charts will be discussed, and probably looking at this chart, the intraday chart as well. And we like names like BKMU. This is one of our favorite names under $10. It is beginning to break out. The weekly chart speaks volumes. That's the chart I am most interested in, and we'll be going over that with members tomorrow. We have to identify the fact that we have resistance at $7 per share. We are inching above this breakout point, and we'll soon be ready to pull the trigger on BKMU. So stay tuned, members. CYBR, this is the other sector I love. I like the banks. I like internet security. CYBR, Israeli firm, had broken down. We traded this twice before. Once we made a nice profit. The other one we took a small loss. Now it's pulled back, and we are looking to build a position once again. Note how we were in a downtrend. That downtrend is now over. We have broken out, and we'll be looking for good opportunities to build a bigger position. FEYE. This is a stock chart that I just simply love. Inverted head and shoulders setup. Left shoulder, head, right shoulder. Now, most people hear head and shoulders and they think it's a bearish chart. No, not an inverted head and shoulders. Basically, take your head and shoulders setup, turn it upside down. That bearish pattern just became bullish, and we are now breaking out above the neckline. FEYE is an internet security play. I like it, and we plan on building a position in FEYE, and I will be sending out alerts to members. The TBT, the ProShares Ultra Short 20-year bond. Folks, I think that the bond rally may have seen its pinnacle, and that yields may just head higher. Why? It's because of the jobs data released yesterday. Now, I'm not entirely convinced that the U.S. economy is healed. I've been fairly bearish on the market. We have held a substantial short position, but we've been long as well. So we continue to beat the market despite the fact that we've had short positions. So the TBT is a play on a pullback on the bond market. So we like the TBT, and we plan on building a position in the coming weeks. So folks, if you get any value out of this video, please enter your email address. We hate spam too. You will not be spammed. Follow me on StockTwits or Twitter. If you're watching this on Facebook, leave a comment below. I'll get back to you. And if you have any friends that will be interested in this video, please share it with them. And I'll talk to you soon. Have a profitable trading week. Be well, folks.